Hello, good afternoon and good morning. Welcome to today's amfori's members-only webinar, New Sustainability Reporting Rules, what the EU Directive means for my business. I realize that the title is rather long and dense, and hopefully this will also translate into a dense and rich in content webinar for you. My name is Valentina Bolognesi. I'm Senior Social Policy Advisor at amfori. And together with my brilliant colleagues, Amanda Soler, Environmental Policy Advisor, and Jaap Jansen, Product Owner BI, we will be your hosts during today's session, which is scheduled to last for 1.5 hours. I hope you can hear me all right. As for any good webinars nowadays, we're going to go first and foremost through some of the quick housekeeping rules, and this will allow also other participants to join in the meantime, because I see that the number is slightly increasing. So you will realize that you're all muted, and this is really to ensure a smooth functioning and running of the webinar. Nevertheless, we really do encourage you to use the chat functionality to post your questions. We will try to keep track of the questions that come in throughout the whole duration of the webinar. We have foreseen a dedicated Q&A session at the end of the webinar, but if we are in a position to respond to your questions while we are in the process of going through the different sections of the webinars, we will do so. Otherwise, the ideal place will be indeed towards the end of the webinar. If for time constraints, we would be unable to answer your questions, or if the question that you ask is for us challenging to answer on the spot, we will definitely get back to you. So your answers will not be left in a vacuum, so to say. So do use the chat to get in touch with us. Importantly, the webinar is being recorded. Therefore, the fact that you are joining this webinar means that you are agreeing to being recorded, and the slides will be shared with those of you registered afterwards. What we will also share is actually a satisfaction survey. It's going to take you really 3-4 minutes of your time, but it is going to be very important for us to understand how you felt about this webinar, whether it met your expectations, and if actually there were other things that you would want us to focus on, or maybe you have ideas of what we could be doing in the future. So please do take the time also to let us know and let us have your feedback on today's webinar. Now, let us quickly go through the agenda, what we propose to cover during today's webinar. I am doing actually the welcoming part as we speak. Then I will cover a description of the CSRD and ESRS architecture. So we love acronyms in Brussels, but I will try to explain what the EU CSRD and ESRS stand for. After that, it will be the turn of my colleague Amanda. She will share with you a couple of examples of topical standards, one for the environment and another one for the social. We actually picked a standard that is mandatory for any company reporting under CSRD, and another standard that is actually subject to materiality assessment. So all those notions will be covered and explained in detail during the webinar. And last but surely not least, it will be the turn of our colleague Jaap, and he will provide you with some video demos of amfori Insights. Actually, the kind of data points, the kind of dashboards, the kind of visuals that you can access via amfori Insights. And I think we will build a case to say that there is quite a lot of information that you can access via amfori Insights, quite a lot of data. Of course, this data in itself will not necessarily help you report under the CSRD. You will have to translate the data into language that actually tells a story, but it's going to be important insights to help you inform your reporting under, for instance, CSRD or other maybe reporting regimes. And then, as alluded to previously, we will try to also leave some time for Q&A, and therefore, yeah, you are most welcome to interact with us by using, again, the chat functionality. Okay, before we start really talking content, we wanted to take a little bit the temperature of the virtual room by asking a question, a poll, whether you are familiar, and if so, in how far, with the Corporate Sustainability Reporting Directive. Normally, if the screen is working well, you now have a couple of options that have popped up on your screen, whether you have already heard of it, perhaps you have never heard of it, and that is going to be also absolutely fine, whether you have already started assessing the impacts of your business, and whether perhaps you are already covered, maybe directly or indirectly, by the existing non-financial reporting directive. So the results are coming through. Let's see when the poll is going to be closed. Okay, it seems that the good news is that you have already heard of it. There are some who are actually totally new to the CSRD, which is also a very good feedback, in the sense that we hope to really get us all on the same page by a means of this webinar. And maybe I can explain that the approach that we took with this webinar, since it is the first time that we discuss and we explain the Corporate Sustainability Reporting Directive via an amfori members webinar, we decided actually to really start unpacking the key pillars of the CSRD, talking really the big picture, explaining the key building blocks, and a number of other key aspects of the CSRD and ESRS. Okay, so we can see therefore the results. So thank you so much for participating, and hopefully therefore the approach that we took is going to help us be on the same page, so that if in the future there is a desire to dive deeper into certain aspects of the CSRD, we can certainly do that together. Okay, let's now move a little bit to explore the architecture of the CSRD and the ESRS. So what is it that we're talking about? But just let me first and foremost zoom out a little bit to just share with you a couple of reflections as to the context. So why is it that the European Commission decided to introduce a legislative proposal for a corporate sustainability reporting directive in April 2021? And just to clarify that, of course, the directive now is officially law. It was published in the official journal of the European Union. Now it's about to start to enter into application, but it's just for us to understand a little bit what drove the European Commission to introduce this legislation in the first place, since there was already a non-financial reporting directive. So I think as for any policy developments or any really initiatives that is being led by this European Commission, it's important to keep in mind always the Green Deal and the climate neutrality objectives as umbrella sort of goals and objectives that the European Commission wants the EU to move towards. It's basically the European Commission conviction that in order to beat the sustainability targets set out under the Green Deal and the climate neutrality objectives, it is necessary that society at large has access to reliable, comparable, good quality sustainability information, in particular information as to the impacts, the risks, and opportunities of companies that do business in Europe and with Europe. It is really in this context that the European Commission decided to introduce this legislative proposal to overcome some of the challenges and some of the shortcomings of the existing non-financial reporting directive. And I think another clue as to why the European Commission did what it did is to look at the title of this directive. Why is it that the European Commission changed even the naming of the directive from non-financial reporting to corporate sustainability due diligence? Corporate sustainability, reporting. This is because the European Commission believes that actually sustainability information has the same value or should be regarded as equally important as financial information. So it's a way to actually put sustainability information and financial information on an equal footing. So all those developments, of course, are just taking place. Much of this is really new, but I think there is a clear direction of travel, and that is that sustainability disclosure, sustainability reporting, sustainability communication is really becoming the new normal. It's also normal, I guess, for companies to feel overwhelmed This is not just because there is a lot that is happening at European level, but also because those developments in Europe are happening at a juncture where you have other important developments in other geographies, notably in the US, but also at international level with what it is being done by ISSB, for instance. So we will not have the time to cover all those other developments at the reporting level in other regimes, but it's just to say that there is quite a lot happening. Europe is definitely taking the lead and setting really the bar high as to what companies have to do when it comes to reporting on sustainability matters. Now that we have covered a little bit the, let's say, the context, the big picture, why the Commission did what it did, let's just make sure that we know what it is that we're talking about. We're talking about a directive that was published in the official journal and that actually entered into application. But this directive, because it is a directive, will need to be transposed by the EU 27 member states into national legislation. And we are actually now at a stage where the member states are starting their national processes to transpose the text of the directive into national law. This process will last maximum 18 months, and actually by June 2024, member states, in principle, will have had to introduce their national laws transposing the directive. The directive is addressed at companies, a set of specific companies, and now we will see which kind of companies will have to do what and as of when. It's about reporting. It's actually about communicating. It's an act of communication externally, mainly to the external world, as to basically the role of a company in society. And in particular, the content of this yearly communication will have to be about material impacts, risks, and opportunities across a wide range of environmental, social, and governance matters. And we're going to unpack those in greater detail in a second. Now, I would like to just compare very high level some of the changes between the current non-financial reporting directive and the forthcoming CSRD, Corporate Sustainability Reporting Directive. These are just some of the changes that were introduced with the new directive. First and foremost, the number of companies that will have to produce sustainability statements going forward will considerably increase. We are basically moving from the current 12,000 companies to something like 50,000 companies. So that means that many more companies will really have to do for the first time sustainability reporting. So that in itself will be a challenge. But the good news is that not everybody will have to do everything at the same time immediately. So we will cover that in a second. Up until now, there was actually quite some flexibility in terms of the framework to be used for reporting. Some companies will have probably used the GRI standards, other maybe made reference to the voluntary guidelines developed by the Commission in 2017. Going forward, actually, the big game changer of this directive is that companies will have to report according to mandatory reporting standards. Those standards will have to be adopted by the European Commission by a secondary legislation, and we are not yet at that stage, but we have seen, and we will be presenting to you, a quite advanced version of the standards that are likely to be adopted by the European Commission. If up until now, companies could actually choose where to visualize or display the reported information, in the future, the sustainability statement will have to feature as part of the management report. Again, and that's, I think, a way for the European Commission to put sustainability information and financial information on an equal footing. So the management report will feature the two. And on top of that, the sustainability statement will have to be digitally tagged. If up until now, there was no need to audit the sustainability information, going forward, the Commission is actually expected limited assurance for the sustainability statement, with the prospect of potentially moving to reasonable assurance in the future. I'm not gonna perhaps really talk in detail about the last section of this slide, but just to say that the information under the Corporate Sustainability Reporting Directive is gonna be much more granular, much broader, much wider. It's gonna include also description of the transition plans by companies, time-bound targets, information across the value chain, and in particular, the application of the notion of double materiality, which we are going to describe in greater detail in a second. Now, I guess this is the question that perhaps will interest most of you on the line. So who will have to report and as of when? The good news, as I said, is that not everybody will have to start reporting sustainability information from the very start of the application of the directive. The co-legislators actually decided to take a progressive approach to the expansion of the scope of the directive. So first and foremost, it will be the turn of those companies that are already nowadays covered by the non-financial reporting directive. That is so-called large EU public interest entities. So that's the violet bucket that you see on the slide. So those are companies that are listed on EU regulated markets and that have more than 500 employees. They will have to start to report on the financial year 24 with reports published in 2025. After that, it will be the turn of so-called large companies. Those are companies that, according to the accounting directive, meet 2 out of the 3 following criteria. They either have more than 20 million euro balance sheet total, or more than 40 million net turnover, or more than 250 employees on average during the financial year. So companies that meet 2 out of the 3 criteria that I just outlined will have to start reporting on the financial year 25 with reports due in 26. That's the pink bucket. After that, it will be the turn of the EU stock exchange listed SMEs. This excludes actually micro enterprises. The good news, so to say, is that those listed SMEs could also use an opt-out clause and basically delay their publication of the sustainability report. In principle, they should start reporting on the financial year 26 with reports due in 2027, but there is a possibility to use this opt-out clause. And if that is the case, those companies will have to justify in the management report why they decided to do that. An important footnote, we will talk about it also in a second, the stock exchange listed SMEs will be allowed to report actually according to a lighter version of sustainability reporting standards. So the European Commission will adopt, with the help of EFRAG, and we will say in a second who EFRAG is, they will adopt a lighter version of the reporting standards, which will therefore differ from the reporting standards that the companies under the violet and pink buckets will have to use, so to say. Last but not least, I think that's also another interesting aspect of the Corporate Sustainability Reporting Directive. External companies that are based outside of Europe, third-party undertaking, could also come into the scope and might also have to provide sustainability statements according to the CSRD if they have a significant presence in Europe. That means that those companies generate more than 150 million euro at consolidated level in the last 2 years, and they also meet one of the following criteria. At least they have a large EU subsidiary or an EU listed subsidiary, or one EU branch generating more than 40 million euros. So companies, third-party undertakings, companies that are outside of the EU that meet those criteria will have to start preparing sustainability statements covering the financial year 2028 and to be published in 2029. Again, those companies, similar to the case of the stock exchange listed SMEs, will have to report on the basis of another more simplified version of the sustainability reporting standards that the Commission is expected to adopt by June 2024. Now, moving a little bit onto exemptions to the reporting of sustainability information. So there are actually sort of 3 exemptions to reporting sustainability information. One case is if you have a group exemption. So if you have a parent that is actually reporting on behalf of the entire group, then the subsidiaries of that company that reports at group level, they might actually be exempted from providing and publishing individual sustainability statements, unless, so there is sort of an exemption to the exemption, unless the subsidiaries are large listed undertaking. There is also another exemption that applies in the case of a third-party undertaking having different subsidiaries in the EU that meet the criteria of the general scoping requirement. Then for the first 7 years from the entry into application of the CSRD, there is the possibility for the EU subsidiary that generated the largest turnover to actually prepare a consolidated report at EU subsidiary level, and therefore for that subsidiary to actually act as the parent, as the EU parent of the EU subsidiaries. Last but not least, there is also another exemption, the equivalency exemption. This exemption basically is foreseen by the Corporate Sustainability Reporting Directive, and basically there is the possibility for the Commission to recognize our other reporting regimes as equivalent to reporting under the CSRD. This exemption, let's say, has not been fully elaborated yet, in the sense that the European Commission still has to work on the criteria for this equivalency exemption. So we will know more, I guess, in the coming months. Now, let's see if we can move. Yes, to the now that we have covered a little bit the basic building blocks of the Corporate Sustainability Reporting Directive, we would like to tell you a little bit about the European Sustainability Reporting Standards. So those are the standards that companies will have to use, companies covered by the CSRD will have to use to report sustainability information. Just as a side note, as of today, day of the webinar, 26th of January 2023, the standards are still in the draft form, in the sense that they have been submitted to the European Commission by this organization called EFRAG. Nevertheless, there is still let's say, the step of the formal adoption by the European Commission that has yet to take place. However, for ease of description, I guess, you will hear me talk during today's webinar about standards. Just bear in mind that the standards are still draft. Despite the fact that those standards are still in draft form, our advice to members, to companies, is really to start reading them, to start going through them, because we do not really anticipate major changes between the draft that were submitted by to the European Commission in December by EFRAG and the adoption date and the adoption versions, which will take place in June this year. So continuing on to perhaps an explanation as to why we talk about Corporate Sustainability Reporting Directive, and then why do we have the European Sustainability Reporting Standards. I think just to mention that the Corporate Sustainability Reporting Directive, as you will have understood, tells us a little bit who is going to be in scope, which kind of companies will have to do what, as of when, and the what is actually rather high level. The standards are really there to build on the legal text. In fact, the standards will be adopted by the European Commission via delegated acts, so it will be secondary legislation. As such, the legislation will build on the legal text of the CSRD. So those standards will go a little bit more granular and will tell us exactly how companies will have to report. So there is a relationship of complementarity between the CSRD and the ESRS. Now, maybe just to understand where it all started, where we are at now, and what's going to happen next, just this slide to say, as we alluded to at the very beginning, that there was a Commission's proposal for a CSRD published in April 2021, an informal agreement reached by the member states and the members of the European Parliament in June last year, publication of the CSRD in the official journal of the EU in December last year, and then early January, actually, the directive started to enter into application. However, there is still this phase of transposition that needs to take place because it is a directive, as we explained at the very beginning. So member states, the EU 27 member states, are now kickstarting their national processes for the transposition of the directive, and this process is expected to be concluded at the latest by June 2024. In the meantime, while the legislative process was happening, the European Commission had already tasked EFRAG. EFRAG is the European Financial Reporting Advisory Group, so an agency actually to really start offering technical advice to the European Commission in the form of sustainability reporting standards. So a first draft version of the standards was presented in April. Those were open for consultation and comments by stakeholders until August. Then EFRAG went back to the drawing board and sort of checked to what extent the comments and the feedback by stakeholders could be integrated, and then presented to the European Commission a revised version of the standards, the draft standards, in December. So that's where we are at. That's where we are at. Basically, now the European Commission has received the draft standards by EFRAG and is starting a process of consultation with different EU agencies. This process is not expected to last more than 7 months, which basically means that by June this year, the European Commission should formally approve the standards via delegated acts. In the meantime, now that EFRAG has concluded the first work on the first batch of standards, EFRAG is starting to work on sector-specific standards, but also on standards for stock exchange listed SMEs. As we said, SMEs will have to report according to a simplified version of the standards. And also EFRAG is going to start work on standards for non-EU undertakings. The idea of the sector-specific standards is that they will complement sector-agnostic standards, which are the ones that were actually developed now by EFRAG, and we're going to see those standards in a second. That's the architecture. So those are really, now we're going to discuss the content a little bit and the structure of the standards. In total, EFRAG submitted to the European Commission 12 draft European sustainability reporting standards, 2 cross-cutting standards, so ESRS 1 general requirements and ESRS 2 general disclosures. Cross-cutting, so this is the horizontal pink bar that you see at the top of the slide. So cross-cutting means that the standards actually apply across the 3 thematic areas that you see underneath, the 3 pillars that you see underneath. And then EFRAG also submitted to the European Commission 10 topical sector agnostic standards. Sector agnostic actually means that those standards apply to any company reporting under CSRD, regardless of the sector of application, regardless of their value chain, so to say. Importantly, I should actually specify that the asterisks that you see on the slide indicate that certain standards and the disclosure requirements in those standards will have to be mandatorily disclosed by any company reporting under CSRD, regardless of their materiality assessment. And that is the case of ESRS 2 general disclosures. So any company reporting under CSRD will have to look at ESRS 2 disclosure requirements and data points and provide this information in the sustainability statement. The same goes for environment E1. So under the different thematic pillars, there is one under the environment, which is about climate change. So the disclosure requirements and the data points under E1 will have to be mandatorily included by companies in their sustainability statement. When it comes to the first social standard, ESRS S1, own workforce, for companies with more than 250 employees, the first 9 disclosure requirements will be mandatory. All the rest, when it comes to all the other disclosure requirements, in total, I think somebody must have counted them. I read somewhere that we're talking about 82 disclosure requirements. So a third of that is mandatory. The rest will be subject to materiality assessment. So the outcome of the materiality assessment will determine what will need to be reported by the company in question. So the idea is that now, therefore, EFRAG has developed sector agnostic standards, but those will be complemented by sector specific standards. So companies reporting under CSRD will have to not only disclose sector agnostic information, but also sector specific information. And if a company conducting a materiality assessment concludes that there is a particular matter that actually is not covered enough by the standards developed at European level, there is also the possibility to add entity-specific information, entity-specific disclosures. So that's the level of granularity that will be, in principle, expected when reporting under CSRD. Now, let's take a look 1 second at the ESRS 1 general requirements. So that's one of the 2 cross-cutting standards. It tells us actually quite a lot about how to prepare a sustainability statement, how to prepare a sustainability statement, a sustainability report. In particular, ESRS 1 tells us actually that the information that companies will have to include in their sustainability statement needs to meet certain quality, sorry, I made a mistake, needs to meet certain quality criteria. Information needs to be relevant, needs to be faithfully represented, needs to be comparable, needs to be verifiable and understandable. And this is because, as I alluded to previously, 1/3 of the information will be mandatory, the rest will be sort of subject to materiality assessment, but there is also some information that is going to be rather quantitative, but the majority of the information will actually be of qualitative nature. Therefore, it's really, quality of information is really key. It's really needed to help understand the context in which companies operate. The ESRS, the whole set of standards and the CSRD really are built around the notion of double materiality. That's a key concept, and ESRS 1 really explains what the concept of double materiality is all about. It's basically making sure that the information that companies report as part of their sustainability statement is information that is actually collected through 2 lenses, applying basically 2 dimensions. One dimension, which basically looks at the impact of the company on the external world, on people and the environment, so the inside-out perspective. But that also, the sustainability statement should include information about the external factors, those sustainability matters, and how they impact the company, the viability of the company, the performance of the company. So we're talking about an assessment of both the inside out and the outside in perspective. The double materiality is actually applied by means of a double materiality assessment. So that's the methodology that companies should basically use to kind of prioritize the issues that they will report as part of their sustainability statement. And the double materiality assessment will be about, first and foremost, explaining how stakeholders have been first and foremost identified, but also consulted by the company, how the company has screened through the different ESG topics, and ESRS 1 actually has a list of topics, subtopics, and sub-subtopics that companies could consider when conducting this double materiality assessment. We will cover this in a second, but companies will also have to look at the whole value chain, apply this double lens of financial materiality and impact materiality, and then apply thresholds, because companies will have to determine the point after which they will start reporting, but maybe they have issues that they do not deem to be material, and therefore as such they've set a threshold under which they will not report matters in their sustainability statement. So those thresholds, in the case of impacts, on people and the environment, will be determined, for instance, by considerations around severity. So the scale, the scope, whether or not the issue can be remediated or not. So you will see that there are also quite important references to the notions around due diligence, which feed into the concept of a materiality assessment. In the interest of time, I'm taking a look also at the timing now. Value chain is another concept that is specified under ESRS 1, meaning that companies, when they look at the material impacts, at the material risks and opportunities, they not only have to look at themselves, but they also have to look at the value chain. That means upstream and downstream. There is an asterisk on the slide because actually there is a transitional phase that applies to reporting information at the level of value chain. Again, the information to be reported is only that information that is material. This transitional phase will apply for the first 3 years from the entry into application of the CSRD. And therefore, for the first 3 years, companies will not have to necessarily collect this information at the value chain level, but they will have to explain the reasons why this is difficult, the kind of efforts that they are putting in place, and the kind of plans for the future to get hold of this information. Time horizon, I think the sustainability statement is there to really tell a story, again, a story about the impacts, external impacts of the company into the world, but also how those factors, external factors, impact on the company. So the impacts, risks, and opportunities. But it's not just about the past. It's not just about taking a retrospective approach into the reporting. The company will have to basically also tell where it is going, what kind of future plans it has in place, and connects the dot between this retrospective information and forward-looking information, and then assess the different impacts, risks, and opportunities over the short, medium, and long term. Short term means less than 1 year, medium term means between 1 and 5 years, long term above 5 years. Those time horizons might differ in the specific topical standards, and that's notably the case of the climate standard. I believe the last point is due diligence. So the companies reporting under CSRD as part of their sustainability statement, they will also have to explain how they conduct sustainability due diligence, because this process of due diligence, and it's the process that is actually embedded in international standards on due diligence, notably OECD, many guidelines, and UNGPs. So due diligence will help identify the impacts that are material to the company, and therefore the impact materiality will feed into the materiality, double materiality assessment that the company will conduct as part of the process of reporting under CSRD. Now, in the interest of time, quickly covering ESRS 2, general disclosure. So this is the second cross-cutting standard, and this is one where the disclosure requirements will have to be included by any company reporting under CSRD, regardless of the outcome of the materiality assessment. So this standard is really about understanding more about the company. First and foremost, the governance. What kind of governance controls and processes the company has put in place to monitor and to manage impacts, risks, and opportunities. What kind of strategy and business model the company has, and how does the strategy or the business model interact with the impacts, risks, and opportunities that have been identified. The IRO management pillar that you see up on the slide is actually about describing the process of materiality assessment, how the company went about identifying the material impacts, risks, and opportunities, but also after having conducted this materiality assessment, what kind of policies did the company put in place to address the issues that are mostly material to it? What kind of actions will the company, or has already the company, put in place to really give light to the policies? What kind of targets? And basically the targets are sort of goals, goals that the company wants to achieve on specific matters, and what kind of indicators are going to be used to track the effectiveness. So this structure that you see up on the screen now is more or less replicated in the various topical standards. You might at times have the governance and the strategy bit, which is merged, but in principle, the structure is replicated, and that means that for each and every topical standard, those that are mandatory and those that are actually material, company will have to describe the basically from the topic perspective about the strategy, the policies put in place, and the metrics and targets. Now, speeding up a little, I already alluded to the transitional phase. I will not cover this in greater detail, but basically there are waivers to make it easier for companies to actually report the financial sustainability information. So not about the value chain, but also about entity-specific information and about the comparative information. And now we would want to launch another poll to understand in how far you have already conducted a materiality assessment, and if so, what kind of sustainability matters are most material to you. And while the poll goes up on the screen, this is also for me the opportunity to pass the floor on to my colleague Amanda, who will take over from here. She will start basically understanding and assessing a little bit the outcome of the poll, and then walk you through examples of ESRS. Thank you so much.
Thank you, Valentina. Can you hear me well? Fantastic. So after well, thanks a lot for the super efficient time management, Valentina. So now we have a poll to determine, well, to get a little bit of an idea on whether you've ever conducted a materiality assessment. We had a taste of your responses in the previous poll, but we would like to inquire a little bit more about the main topics that could be material for you if you have ever conducted such a materiality assessment. So we're going to give the audience a few moments to respond, and please keep in mind that you should limit your responses to 3 if possible, so we can really assess what are the most material priority topics for you. Okay, so we have some of the results already available to the public. Quite interesting results, so better than expected. So we see that almost half of the participants have actually conducted a materiality assessment before. And we see the most material topics here. So first we have workers in the supply chain, followed by climate change, which is quite a nice coincidence since those are the 2 examples that we picked. Resource use and circular economy, of course. And then 30% of the audience does not really know. I guess this is connected to the fact that they might not have conducted a materiality assessment before. For those that haven't done it yet, a quick note that amfori is preparing a series of materiality assessment trainings for our members. I believe the trainings that have already been scheduled are fully booked. However, due to high demand, my colleagues in the capacity development team are already planning to organize more. So if you're interested, do feel free to reach out to my colleague Valentina or me, or to contact my colleagues in the capacity building department. So here there is the snapshot of the results. I believe that Valentina provides a very wide and well-described perspective on what the CSRD is and how it interconnects with the sustainability reporting standards, how they work together, timelines, and the planning by EFRAG. And now we would like to dive a little bit deeper into how do those standards actually look like in terms of content and structure. As Valentina explained before, we've selected 2 standards, ESRS S2 and ESRS E1. Brief note to mention that S stands for social. So S2 means the second social standard, which stands for workers in the supply chain. This is a standard that is subject to your materiality assessment. So once you conduct your materiality assessment, you will identify your material sustainability matters. And if S2 is one of those matters, then you will report on that and be required to follow the specific requirements described there. And then ESRS E1, as you may have already guessed, stands for Environmental 1. And this is particularly about climate change. The important thing about E1, I believe Valentina also mentioned this, is that it is compulsory to all, regardless on whether you have identified it as a material topic. You will need to report on this. And then we can move to the next slide. Perfect, thank you. So here we would like to, before we mention before I describe how the two examples work, I would like to give you a quick overview of how they look like. We picked this picture from ESRS S2, but in fact the structure is the same pretty much across all the topical standards. And what is important to retain here is that the standards start with the objectives and a brief description of how they interact with other standards. So for instance, if we're talking about climate change and you need to report on greenhouse gas emissions, some of your emissions might not fall under E1, but they might fall under the pollution standard. Okay, so here they will, there's an explanation on how you need to report according to both and how you can link them. The next part usually refers to general information, to general disclosures about governance strategy, and the list of impacts, risks, and opportunities that you've identified. After which we move on to the actual impact, risk, and opportunity management, where you need to explain what specific policies, lists of actions, targets, and resources you've allocated in order to manage your impacts, risks, and opportunities. After which we move to metrics and target section, which is basically a disclosure of the metrics and targets that will underpin those policies and actions. And then at the end, we have the annexes. And an important note here is that, well, Appendix A is more on defined terms, so it's for you to understand what specific concepts mean. But then Annex B usually refers to application rules, and it forms an integral part of the standard. So where the text and the disclosures within the main body tell you what you need to report on, this annex usually tells you how to do it and what methodology you should follow. And I think we can move to the next. Yeah, perfect. To the next slide. This is a representation of how each disclosure requirement looks like. So they usually, well, they always start with a general description of expected information, followed by a description of the objective. Usually the objective refers to the kind of data, the kind of understanding that the users of the sustainability reports will need. So by users, we often refer to financial institutions and financial actors, but it could also mean other stakeholders. And this refers to the things that they would like to know about your company with regard to that specific sustainability matter. And then the third part describes what needs to be reported. So as I was saying before, the main body, the reporting requirements tell you what you need to report on, but then when you look at the annex, you will actually see how to do it. And I think we can move to the next. Now let's deep dive into ESRS S2 and its specific disclosure requirements. So as you can see, there is the information is structured across the three pillars that we mentioned before. So it's the general information one. The second one is on how you manage your impact, risks, and opportunities. And the third one is on the metrics and targets that will help underpin and improve the efforts made towards under the policies and actions that you've reported on. The first standard start with a connection, a link to the general information SPM2. So that stands for strategy and business model. And it basically provides an overview on what are the views and interests of your materiality affected stakeholders in the supply chain, and how you have engaged them in the process, how you have considered those. The second one refers to whether potential impacts on the value chain workers are connected to the strategy and business model, and how those impacts contribute or trigger adaptations in your strategy and business model. So this is really about the interconnection between your business model and strategy and the impacts, risks, and opportunities that you've identified. And then we move on to the management part. I won't get a lot into detail because, well, in the interest of time, but here is about describing the list of policies and actions and resources that you've put in place to manage your impacts, risks, and opportunities. And then finally, we have the metrics and targets part, where you will need to describe the targets related to managing material negative impacts, but also advancing positive impacts. So it's about the positive side of your impacts, and also, of course, managing material risks and opportunities. And before we move on to the E1 example, I would like to mention very briefly. I'm not sure if everyone here has heard of or knows amfori BPI, but it's basically our risk identification, assessment, and mitigation tool for environmental matters, and it produces, as part of the process, a set of factory-based data on 8 environmental priority areas that you can see on the left. And this is just to show you that those environmental priority areas are connected to the environmental standards on the right under the CSRD. We are currently in the process of assessing what factory-based data could be useful for your reporting efforts. So if you have already had a go at this, you know what topics are material to you and what data you might need, please reach out, because we are seeing how we can select what data we should select and how to feed that into business insights and make a representation that can help you in your reporting efforts. Quickly jumping to ESRS E1, same as before, the disclosure requirements are divided in the 3 pillars that I mentioned. Perhaps a couple of things that I should mention without digging too much into detail. A big difference in this standard is that you will need to report on your transition plan for climate change mitigation. And this is a lot for investors and other users of the information that you will report on to understand and to which extent your company and your transition plan is aligned with a 1.5 degrees Celsius goal of the Paris Agreement, and also with a carbon neutrality target by 2050. And this disclosure requirement is actually aligned with the next one, ESRS 2, Strategy Business Model 3, which is on the interconnection between your identified impacts, risks, and opportunities and your strategy and business model, as I explained also in the previous S2 example. For IRO management, similar logic. So you will need to describe the processes to identify and assess and manage your IROs, the policies that you have in place, and the actions taken to underpin those policies and to achieve the targets. And then the third part will be on, again, describing your targets towards climate change mitigation and adaptation, and also towards mitigating risks, not only physical risks, but also transitional risks. So changes in legislation, changes in the demand, etc. And then interestingly enough, there is a prescriptive list of metrics that you will need to report on, which I won't mention because it's quite self-explanatory. Now, the interesting part, what does this information mean for your business? So there's a couple of things I wanted to mention. In the first place, this, we're not going to lie, this is a complex piece of legislation that will require a specific set of skills and a strong internal coordination due to the amount and the width of topics and disclosures that the ESRS cover. However, it also sets a level playing field for companies to report on your good practices and progress. And as I mentioned before in the chat, it will complement your due diligence efforts because it will help you report and tell a story about your due diligence system and your efforts and your progress towards your targets related to material IROs. And it will also help companies to access sustainable finance because it will aid, it will provide information that sustainable investors need to include specific companies and projects in their portfolios. And another point is that, as I mentioned before, it is not only about negative impacts, but also positive impacts. And here, I'm almost done. Here is a clear message that we very much like from Richard Howitt. The story about the company is already out there. The sustainability report is the company's opportunity to shape it. Do not miss the wood for the trees. This means that normally your information will be scattered across websites, social media, perhaps NGO reports, and this is really your opportunity to compile all the information, put the pieces together, and tell a story with a meaning and build trust in your communities of interest. And finally, this is also an opportunity for you to learn in the process, to learn about your material IROs, to learn how to adapt your strategy and business model to those, and become future-proof. Here, I wanted to mention a few things, but I want to pass the word to my colleagues. So very, very briefly, those are some steps that we thought you should consider. And what I would like to highlight is that you might need to get feedback from a legal counsel to assess whether you fall in the scope of the legislation. Standards are unlikely to change dramatically at this stage. And therefore you can already start having a look at those and preparing internally, involving colleagues across different departments, and also making sure that top management is aware of those standards. And also a quick note that companies in the scope will likely, well, they will need to disclose in how far their activities are taxonomy aligned. You have further information in the E1 standard example that I mentioned before. And now, without further ado, because I'm a little bit late, I would like to pass the floor to my colleague, Ja, for the interesting part of the session.
Thanks, Amanda.
Yeah,
I think the previous part was also very interesting. Thank you very much. So I'm very happy to be here today to talk about amfori Insights. It's still one of amfori's newest tools, although it's gradually maturing and picking up pace. So here you see how it actually looks, the page itself. Later on, we will see also how you can access Insights, because probably that will be one of the first questions you may have. It's included in the full amfori membership, so no worries that you have to do anything extra. If you have a full amfori membership, then you can access it. Just in the context of this webinar, so we're talking about reporting. So Insights is definitely a tool that can help you with your reporting, your annual reporting and your legislative reporting. However, it does much more than that as well. So we also offer analysis, and also our ambition is to in the future really guide your decision making through data. So that's ahead, but we're getting there at a quite quick pace. We can move to the next slide, please. Thank you. So maybe we can press enter once, then we'll see the first thing I would like to discuss. Thanks. So there are 17 topical dashboards on insights. You might think, okay, that's a very big number, like, isn't that too much? But as you saw on the previous screen, it's structured around specific topics. So we guide you towards the right dashboard and data that you need. So that's something I like to highlight. So there's a lot of information and it's well structured and easy to use. And then the next point is that we work quickly, we work agile. You see that in the picture. So we have new releases every 3 weeks. And that means that we're continuously improving. And really a key thing for us for insights is to listen to the users. So last year in 2022, one of the main things done was really to interact with users and see how we can adapt to their needs. Then the last point I like to discuss to explain about insights is that we have now over 600 member users, quite significant number. However, we know that there's much more potential and probably there are quite a few of you who haven't used it or haven't even heard about it. And we know how many users there are, for example, on our main platform, the sustainability platform. So there's still a lot of room for growth. So that's also exciting. Then moving on to the next slide. We start already with a video in the context of workforce composition. So how can insights specifically help you with CSRD reporting? And then we will watch this video to show you that. So it's a demo video and we can play it. Thank you. Gaining insights into your supply chain workforce composition can help you understand your exposure to certain risks. This information can feed into your materiality assessment. The upcoming European Sustainability Reporting Standards expect reporting companies to describe the types of workers subject to material impact. That could include migrant workers and women, for example. Amfori Insights is accessible via Amfori's sustainability platform. Our members click on the link, then they authenticate, to access all topical dashboards of insights. Overall, it provides country risk information, monitoring partner information, and most importantly, it provides aggregated supply chain data of the member that can then be filtered down according to the needs. Under Supply Chain Overview, there is a dedicated section about workforce composition. Here, Amfori provides aggregated vulnerable worker information that was collected during the BSCI audit. It allows members to identify risks if there is a significant vulnerable worker group present in a factory or in a geographical area from which the member is sourcing. There is a question mark on top of the dashboard which provides an overall description of the dashboard and its data. Okay, so that was the first demo video related to insights and relating to CSRD. Yeah, we're not going really into depth here, so also later I will provide you with the insights into your supply chain. It's already playing. It's very delicate. So we're not trying to give you all the specific details. Workforce composition. I think we have some. We know PowerPoint is very delicate, so apologies about that. So yeah, we're not trying to go really into the details how to use the tool. So there will be a link later to show you how to go a bit further. So in all the videos you will see, it's just showing you quickly, and there is much more behind, like more data that you can download and also specific tables you can see. So we can move to the next demo video, which is about zero tolerance. I think we have to go to the next slide, and then it will play the next video. Gaining insights in. Yeah, that's the one. So this one is about zero tolerance. It will also be explained in the video, but zero tolerance, one of the key features and services of amfori, is to really alert you in case there are serious human rights violations found during a BSCI audit. And now we can play the video. Zero tolerance alerts are triggered when violations of the amfori BSCI Code of Conduct are detected by auditors. Gaining insights into those can provide you with an understanding, one, as to whether those violations are widespread, systematic, or rather about individual incidents. Two, and whether certain geographies or commodities are more exposed than others. Under the draft sustainability standards on workers in the value chain, reporting companies are expected to describe how they take action on material impacts affecting value chain workers. They are also expected to describe severe human rights issues, if applicable, the actions planned, underway to mitigate or remedy those, the geographies or commodities for which there is a significant risk of child labor or forced labor. The Zero Tolerance dashboard is located under the button Supply Chain Performance. It shows the zero tolerance cases of a production site with which the amfori member is doing business. It gives information on the historic number of zero tolerance cases as well as whether they were resolved, yes, no. You now magically see appear zero tolerance information, numbers, and charts. And in the next image, you will also see that there is specific information such as the type of zero tolerance and the description of. All right, so that was it for zero tolerance. So just to give you a glance how there is also easy reporting and easy monitoring on zero tolerance cases happening in your supply chain. We just have 3 more videos to go, so bear with me. They're very short, and it's just to give you some key information about the tool. So next one is Academy, and there we'll look at what was also mentioned before, capacity building, which is also very relevant under CSRD reporting. So we can now play the video. Sustainability reporting, according to the CSRD, is also about reporting on material positive impacts. This could include, e.g., capacity building, to supply chain workers with a description of the workers that could be potentially affected, including their geographical location. Another example could involve capacity building for business partners through energy management trainings to improve their energy performance or performance in other environmental areas. Via Insights, you will be able to monitor and report on trainings completed in your supply chain. This can be found under Supply Chain Performance and then clicking on Academy. All right, that was that for the Academy video. I already see a question from Rolf Eric about where to find the videos later. So definitely we'll share this presentation normally and also include the videos. And I can also provide them separately. So we'll just see what is the most practical for you. Then later on, we'll also see the resources that are available to you. And we also have something in development, a training course for insights that will be released quite soon. So moving on to continuous improvement, how that can help you in the context of CSRD reporting. You can play the video. Part of the disclosure requirements under the forthcoming reporting standards is also about tracking the effectiveness of the actions taken. The Continuous Improvement Dashboard on Insights provides you with an overview of the findings per performance area. You could therefore include data in your reporting showing corrective actions and consequential improvements. Here on the top right of the second visual, you see types of measures taken to address certain findings: compensation, training, policy, employee labor contract, description of for new employees, sign the standard contract version, laws and regulations are updated regularly, train existing employees on BSCI. These are some examples. That was very brief continuous improvement, and there's only one video left. It's last but not least. So it's about environmental risk assessment, which also Amanda just spoke about before, which is part of our BPI program, for which we also report relevant data and metrics. There we go. An amfori member can visualize relevant data linked to amfori BPI's 8 environmental performance areas, for example, energy and climate, emissions to air, and biodiversity. Through the environmental risk assessment, an amfori member can easily identify how their business partners perform in each environmental performance area and use this information in their materiality assessment to select the most material topics that the company will report on, in line with the ESRS. Members can see what environmental areas present the highest risk and where the highest environmental risks are operated. They then can select specific improvements for which the member can report on the progress and collaboration with stakeholders to improve their performance with regard to the most material sustainability matters. amfori BPI captures plenty of environmental performance data per site, which could potentially be presented on this dashboard. amfori is currently assessing what kind of data could be of most value to our members. Please have a look and let our BPI team know what you need. The more members that use amfori BPI, the more performance data becomes available. That last part dropped off. Yes, also Amanda did. We have a call for you to use BPI. It's part of the full membership of amfori. So definitely, the more members are using it, the more supply chain data will become available also for other members that may work with the same production site. We'll go to the last slide before we move to the Q&A. And that slide is just to refer you to the resources. I think it has probably like an enter, so maybe we can already put it all out there. Thank you. Yeah, so contact and resources is also linked to the question that was asked. So we have the amfori community where we post relevant updates about the new releases. You can contact info@amfori as well. And then there are resources on the Academy and also on YouTube. And as I mentioned, we're in the final stages of developing a training specifically on insights that will go a bit more in depth about how to use insights practically, because of course there are always little details that are good to know. But the page is quite user-friendly, so that's also our aim, that you don't need to look too much at resources and require too much training. So that's where my story ends. So I thank you for your attention. Also thank Valentina and Amanda for inviting me to present this tool.
Thank you so much, Jaap, for giving us this very quick overview of the many opportunities that actually are behind amfori Insights. Now we are left with 15 minutes before the end of our webinar. So we would like to really dedicate this time and allocate it to questions. We answered some of the questions via the chat, but maybe we can, together with Amanda, go through them now and see whether there is anything that hasn't been fully responded to. Maybe one question regarding the videos. This is, I think, an easy one. The videos that were played now by Jaap, they will be embedded as part of the presentation. So the hope is that people can actually play them alongside the slides that they will receive. Otherwise, do get in touch and we will do our best to share with you the videos. There was a question about the complementarity or not between the Corporate Sustainability Reporting Directive and the Corporate Sustainability Due Diligence Directive. I think that's a very good question. Thank you so much for bringing it up. And I think indeed there is definitely complementarity between the two. The idea, of course, the CSRD, so the Corporate Sustainability Due Diligence Directive, as a process, as a legislative process, is still ongoing. So it is not yet concluded. It is not yet law at European level. Nevertheless, already the draft that was published by the European Commission in February did make reference to the Corporate Sustainability Reporting Directive, because the due diligence directive is about companies having to conduct due diligence. And as we know, reporting or communicating is one component of due diligence. So the idea is that companies that will comply with the CSRD will have to then look at CSRD in order to do the reporting. So there should be, in principle, complementarity, and that's definitely the ultimate goal. We will have to see once the text is finalized how that is going to work out in practice, but that's definitely the intention. And that's also, by the way, one of the key messages that we as amfori, we try to put forward when interacting with policymakers. I mean, let's not duplicate efforts. Let's make it clear for companies what it is that they have to do. But in principle, indeed, the two will go hand in hand. Okay, Amanda, feel free to jump in if you see any questions where we might want to further elaborate.
We had a question about the data for BPI. So normally it was informed that BPI data is still being going to be migrated. So we will be happy to clarify that further, so we have specific details. And our membership and as well as the BPI team could answer that more in detail, the timelines. But definitely it was communicated to be scheduled to transfer the data from the old BPI platform to the new one.
Yeah, thank you both. And maybe I could take on the question about, is it possible to add the production facility performance area and sustainability reporting? So when it comes to environmental data, the factory-based data is the closest, has the closest link to the metrics that are in the ESRS. So here's why we are kindly asking that if you have already conducted your impact assessment or risk assessment exercise, materiality assessment exercise, to let us know what data could be most relevant for you. Regarding the EPAs, I think, so it is more about qualitative information than quantitative, but you can use it for reporting on progress. You could potentially use it to assess, as a tool to support your materiality assessment, to see what are your most risky areas and how they have evolved over the previous reporting years. And you can also use it to identify until which extent or in which geographies you want to report data on your value chain. Because I believe Valentina might have touched upon this in the past, but the value chain information that you are due to report on is subject to materiality assessment. So you will need to explain where in the value chain your impacts are. And by looking at the environmental performance areas, you can also click on each one and see in which geographies your BPs with the highest risks are based. So in that way, you can also assess in which countries you would like to focus. And I'm sure that there's more applications, but I think we will cover this in a subsequent webinar if there is interest for that. I hope I answered properly.
Thank you, Amanda. There is a question from Matisse regarding, I guess, the supply chain knock-on effect of the requirements. In particular, yes, whether or not the data will have to be passed on to customers. So in principle, I would imagine that as for any due diligence type of exercise, this will be the reality of things, right? Companies that are more downstream, so to say, in the supply chain will need to find ways to collect the data further upstream. What the directive says when it comes to, for instance, value chain, is that for the first 3 years from the entry into application of the directive, there is not an expectation that companies that are covered by the CSRD will have to collect this information upstream and downstream. And this is done not just because it could be challenging, because maybe because of leverage or lack of leverage, or maybe because of contractual types of relationship, or maybe because of different reasons, there is a challenge in collecting the data, but also to avoid overburdening SMEs. So that is also one of the logic, one of the reasons why actually the value chain transitional phase is included. So that has to be understood as both upstream and downstream for the first 3 years from the entry into application. And then I'm seeing a lot of pictures that are being shared. And I'm not sure if this is meant to be a question from Asan. Okay, we still have 7 minutes to go. Any additional questions, or do we see, there was a question regarding the timing of the publication of the sustainability statement. My understanding, but again, I think it's good to also cross-check, is that really this sustainability statement will have to be featuring as part of the management report. So it will have to go alongside the financial statement. So I think what matters, what counts is if you are already producing a financial statement, that the two will have to go together. And when you publish it, the data will have to be regarding the previous financial year. I hope that was clear.
So there was a question about, is it possible to add the production facility performance area in sustainability reporting? But it was not clear if it's maybe more a question for Valentina or if it's more about the tool. So if it was about the tool, I answered that indeed we can provide that data and it's already there available for members to download. So members see that, but production sites don't have access to insights. They only have access to sustainability.
Yeah, I think I covered it from the legislative part. So maybe just to summarize what I explained before, I'm sure that there's different applications throughout the requirements, but the main benefits that jump are to support the identification of impacts and risks in the materiality assessment, and also to identify in which part of the supply chain or in which geographies the higher risks are, and therefore the sustainability reporting efforts should be oriented towards. But just to mention what I explained before, we have a lot of per site data and country risk data in our sustainability platform. You can even do a cross-check of the according to a specific sustainability matter, for instance, water stress or climate change across risk countries and risk producers. But in order for us and for my colleague Jaap to identify what data would be more relevant for you and what data should be fed into Business Insights, we need your feedback. We are also doing our own assessment, but of course it's always more better, more efficient if you let us know directly.
Thanks, Amanda. Maybe quickly responding to the last question by Patricia, whether or not there is a template for the reporting. So there is no such thing at this stage. I mean, really the template, if you will, is the standard. I mean, really what companies will have to do when reporting, they will have to look at the standards. They will have to follow those that are mandatory standards. And then when they deem an issue to be material, they will have to, again, look at the topical standard or the sector specific standard when those will exist, will be made available. So that's, I think, the guiding compass for reporting sustainability information. The question regarding the tips for collecting the data, that's a good question. I think first and foremost, understanding what it is expected of the directive in general, what it is expected of the standards, understanding what might be material to you from perhaps the perspective of the retailer. Yeah, and then looking indeed at different data sources, being insights, but maybe there could be other data sources out there, trying to really inform the data gap as much as possible, because of course what amfori Insights provides might not be the ultimate solution. I don't know if colleagues would have any other idea.
Yeah, maybe I can quickly jump in just to complement what Valentina said. I would expect, I mean, I would say start with your own analysis, understanding what impacts are, risks and opportunities are material to you, because chances are that there are sector-specific risks that are the same for you and for the and therefore are the value chain risks of the big retailers, the big companies. Not necessarily always, but chances are that they will be some of them or many of them will be aligned. And then secondly, there is, for your information, well, Valentina already explained that EFRAG is working on specific standards for SMEs, for listed SMEs. This is, well, a big point for discussion is until which extent the standard should be aligned with the general standards that are already out there or not, and until which extent the SME standard should put a cap on what larger companies can request from the SMEs. We are in the process of reviewing those standards, so if you would like to contribute to that point, regardless whether you are an SME or a larger company, please do get in touch with me, because yeah, we're currently looking into this. Thank you.
Okay, for when you receive the slide deck, here we have included some useful resources, what we thought might be of interest to you, such as the text of the CSRD, the text of the draft ESRS, but also because you might be familiar with GRI and you might be wondering, okay, if I have already used or if I'm using GRI to report, then am I doing it, you know, totally wrongly? Do I need to change my approach? Do I have to start from scratch? So GRI is actually very much engaged with the whole process for the development of standards at European level. So they have also put out this Q&A. So you have a number of resources. If we could move on to the next slide. Okay, this is the final slide. You have our contact and our email addresses. So we will review the chat box, and in case we have omitted some questions, we will get back to you. Do not hesitate to reach out to us, right? So Amanda, myself, and Jaap, but also the rest of the amfori team is available. Do not hesitate, play with the tool, with amfori Insights. Let us know what could be done differently. When we send you the survey after this webinar, also let us know if there is anything else that you would want us to cover in a more granular fashion in the future. Thank you so much for being with us, so numerous, and we wish you a good rest of the day and then a good weekend ahead. Take care. Bye.
Thank you. Bye-bye.
Thank you, everyone.